So these markets have been fantastic over whatever since 2009, when we had this huge turnaround in the markets after quantitative easing, and we've had incredible bull run, probably one of the longest and fastest running bull runs in history, and there is still plenty of opportunities, not necessarily buying the market, but there are still plenty of opportunities to trade and make money either daily, or if you are working, then there are some simple things you could do to participate in this market in the evenings when you have 30, 40 minutes just to have a look at the markets and make some decisions. So I'm going to talk to you primarily about investing, so buying and holding over 1 to 2 days, or anything up to 1 to 3, 4 weeks. Okay, so not necessarily really sitting on something for months on end, just looking for moves that could generate quite significant income with very low risk. Okay, so let's just get going. Like I said, I'll ask any questions and then we can I can come to them. We will look at a few charts and a few markets that you could have traded at the beginning of the year, and then talk about where the market's going to go in the coming weeks as well. So before we go on, just a disclaimer, trading does involve risk. Never trade money without taking full management risk controls. You could lose more than your original account size. Okay, so now we've got the boring stuff over and done with. Let's get into talking about some of these markets. So how can you trade these markets? Well, the markets are here to find a fair price. So the markets are pricing in what they think is a good price with the fundamental factors that are affecting the markets and affecting prices of stocks or commodities. So here you've got an example of, this is the Dow Jones Index, the US index, and it covers the period from December of last year. This is December last year, and then we came into the new year with a huge big green bar, and then we ran. Now, we didn't run in a straight line because markets don't move up in straight lines. We moved up in a certain pattern, a certain formation. So if you're taught how to read a market like this, then you can get involved in that market and you can participate with high probability and very low capital risk at all. I mean, you could trade as little with £100. You don't have to be wealthy. You don't have to have a big account. You can just, if you trade very, very carefully and very technically, you can trade and make very good money. So each one of these bars represents the price for one day. So for example, on this particular day I've chosen, the market would have opened at the low of, we call these candles, the market would have opened at the low there and it closed at the high. That's why it's green. This bar over here would have opened high and closed low, so it's red. Okay, so that's as simple as it is. So on the end of 2018, the markets were still very weak, very what we call bearish. So we had a dip, we had a little rally to the upside, and then we sold very hard into Christmas. And then as soon as we got into the new year, we, this level, this price here was bought, and on this day here, we had a significant higher close. So that tells you that the buyers were interested in the price of that market. So ever since we started this year, I think this was actually 26th of December. I think that from memory that was the day after Christmas Day. So what happened was, because the markets were there weren't a lot of participants around. In the first week of January, it dipped, but it came to a price level that the market was prepared to pay, and then it started to wind up ever since. Now, a few things to note here. You don't need to know anything about economics. You don't need to know what is a good price in any one market or an expensive price in the market. You just need to know how to read the charts, just as you read a book. So the other thing to note is, as you can see quite clearly, these markets do not move up in a straight line, and generally they do not drop in a straight line. They move in very predictable ways, and that's what makes technical traders like me and lots of other technical traders out there, that's what we use, and that's how we enter this market and how we exit this market. So let's move on to the next slide. So basically what you're doing is you are buying green and selling red. Okay, well that sounds really simple, but what does that mean? Buying green, selling red. How do you do that? Well, if you have a big, a lot of selling like this, and suddenly you have a big impulsive push higher, you don't just buy up here. You wait until the price drifts back again, because if you notice what's happened here, on this very big buy signal, on this very high close that we had on that particular day, the very next day the price moved to about halfway along that bar. So when the masses, when the bulk of the traders saw this, they didn't buy up here, they waited until the market dipped. And then once it dipped, they held it. They had an emergency exit order down there in case the trade went the wrong way. And then over time, it pushed up for 3 days later, sold a little for a couple of days, and then for that following 2 weeks, that's 2 weeks of trading here, it closed higher. So you were buying on the green here, but you weren't buying on the day that this bar was formed, because you waited until it closed. You went to work, you came back that night, you would have seen that was a big, a lot of buyers came in the market that day. So the next day you say to yourself, right, I will buy here, I will have an emergency exit order here in case it goes wrong. So you're risking that amount of money for the market to recover to where it dropped from. Now, why would you want the market to recover? Because the market repeats itself. It loves finding the levels that it's used before. So it loves history. History repeats itself. So here's the big drop. Here's the buy signal. There's your entry. There's your risk. There's your target. Now, you don't have to wait for, this took into March before that got up there. So you don't have to wait that long, because after 2 to 3 weeks, you've already got the market coming back to this part of history. So once it came back to this price up here and here, a lot of traders took profit. And you can see we spent another week and a half doing nothing, moving sideways. So that's one way in which you could trade that. You could either trade this the next day here, or buy a dip, just leave an order in your account to buy a support level like that, or even if you miss that trade, you can still legitimately get in at these levels and then target this exit up here. Now, if you are really in tune with the markets, you could sell up there and still continue to buy a dip. And then you could buy down here with an exit order down here. So again, risk that amount of capital to see if the market could then push up to that way. So sounds simple, but it isn't complicated. The only time trading gets complicated is when us adults make it complicated, because whenever you teach somebody something that's, particularly if it's out of your comfort zone and you're not used to trading, you're buying when the price is coming down does not feel normal, and it won't feel normal until you're used to trading. So this is why some people do not make money in trading, because trading is counterintuitive and it needs a lot of patience, because you don't get, this was the only signal we've had like this in 3.5, 4 months. So these signals don't come along very often. So that's why it needs a lot of patience and discipline and a plan to trade it. Otherwise, if you start trading going in and out, in and out, in and out, in and out, you're going to make a mess of your account and potentially lose a lot of money. But if you have a plan when you come into trading and you use that plan all the time and stick to it, you can make money trading. So this is actually where we are. I've taken this screenshot today, and that's where we are today, sitting up here quite high after all this big move. Now this is 5,000 points. So how much money could you make out of this if you were buying using this particular style of trading? Let's get further into the chart. So this is a graphic showing you how this price was potentially going to happen going to come back. The history was going to repeat itself once you had this buy signal. So let's talk about how you can find these levels. So the whole idea with trading like this is that you have a chart which you can get for free. You draw on that chart and you plan your trades. So here, each bar here is 1 week's trading. I've shown you charts, a daily chart with one day's worth of price. I'm now showing you what the Dow, the US index, looks like with the price of each week in these charts. So this is September. This on the left of the chart here is September 2018. In September 2018, we were 21,500 here, and we moved up to 26,000. I think it was about 700. Now, in the early part of last year, we saw a lot of selling, some buying, some selling, some buying, some selling, some buying. And we returned back. So once this price was bought, we returned to this price. Once this price sold, we returned to this price. So you can see, and then once we're in this year, at the beginning of this year, end of last year into the beginning of this year, we move back to very close to these highs again. So it's very technical trading. The markets are remembering and noting where the price has moved before, and you have traders looking, hunting for this price and looking for this price. Okay, this is quite noisy in the middle here, in the middle of 2018, but ultimately you can see once you get green, you start getting green here, well, you got green here followed by red, but once the price, this price held, you start getting green here. It dips again, but it gets green again, oh, it gets red again, nice green, comes up to this resistance level, dips for 3 weeks, and then runs for about what's that, 2 or 3 months. So even if you made a loss here, if you bought here and you got, your stop was executed, your trade was cancelled at a loss, you still had the potential to make money, a lot of money here. That's where markets don't generally move in such a fast, big sweep. They can get very noisy. This is where you have to be very careful, very disciplined, and put in a little bit of time to decide whether you can trade or not. Decide whether there is a trade worth taking or not. So here is the actual markets move in waves like this. This is wave number 1. So that's the impulsive wave. This is wave number 2, which is the pullback, profit taking. So traders have taken profit there and pulled it back. Traders have come in, some traders have missed out on this. So other traders are buying here to make sure they want to get in on the next move. So that's move 1, this is the pullback, move 2, this is wave 3. So a lot of traders get very excited, they're buying, they're not selling it, and then you see some profit taking. So the market pull back for 2-3 weeks, maybe a month or so, and then you get another leg to the upside. So that's why the 4 is the pullback and 5 is the main move. So wave 1, 3, and 5. You don't need to know this. You don't need to know how this market works. But this is a simple method that I use to calculate where the best entries are in this market. So there's trade 1 for a move. There's trade 2 for a move. There's trade 3 for that move. And then at the moment, you're seeing a lot more red up here. There's a big red bar there. So this market is struggling. It's found the market is suggesting, Mr. Market saying this is very high, and a lot of traders are taking profits. They're not buying that market, and it's being forced to the downside. So yeah, that's a good question. Where can you get these charts from? These charts that I'm showing you are actually free. If you use, all brokers give you free charts. So if you open an account, then you need to make sure that you're using a broker that has a good chart package, a good free chart package, and I'll recommend that. I'll talk about that in a minute. So thanks for that question. Okay, so let's just find out. Let's find out how much you could have made. So how much can you make? This Dow has moved, from bottom to top. It's moved 5,000 points. Now, you could have made more than that because each wave was very high. So if you caught each wave, I'm not suggesting we're not in the business of finding bottoms and finding tops, just in the business of getting the most of that move. Not all of it, the most of it. So there were more than 5,000 points available because it dropped and then pulled back again. So, but if you bought that on the buy signal in the very end of last year and the beginning of this year, I did nothing. Even up till now, at £1 a point, you could have made £6,000. Now in spread betting, you can do that for free. Now the actual risk that you would have risked as little as about £150 back in January. And what do I mean by risk? What I mean is, if you've got a trade like this and you are buying here, you don't know that that's going to move up. There's no certainty in trading. That could have, there was a lot of selling in the back end of last year that could have moved higher and then dropped. So if that had dropped, you have an emergency exit order that takes you out of the trade, and had that have happened, you would have lost £150. So there's no guarantees you could have made £6,000, no guarantees whatsoever. Where every time you take a trade, there's a risk, there's a price. And in January, the price was about 150 pips. So that you're risking £150 to make £6,000, assuming you were very, very patient and waited all that time. Otherwise, you could have, most of these trades were about 3 to 6 weeks. Trade 1 was 3 to 6 weeks, trade 2 was 3 to 6 weeks, trade 5, well, the wave 5 was 3 to 6 weeks. Excuse me, just take a sip of drink. In the meantime, there are other markets. And this is just the Dow. This is just one market. You could have traded something else. So let's just come out of the charts for a minute. Come out of the slide, sorry. Let's have a look at what else you could have traded. Excuse me. Let's look at another sip of drink. Let's look at a stock you all know. Let's choose BT. That's BP, that's BT. Excuse me. So this is a chart of BT. Each one bar represents 1 day's price. And that's a little bit messy. Let's choose something else. This is, let's choose Domino's Pizza. Here we are. Domino's Pizza. This is the price on the London Stock Exchange of Domino's Pizza. So the support, remember, the market loves historic prices. So that price of £2.38p was key in this period. That was July 2017. So when the price came down to this level, a lot of people in the market thought that was very cheap because the price had been at this level, £3.64p. So when the market came down there, it got bought. Now we're not looking to keep buying lows, we're looking for confirmation. So the confirmation was there on December 20th. There is the big selling, and then on that particular day we closed higher at £2.20. 3 days later, we were still down there at £2.20, and then from the 27th, 28th of December into January, here we are on the first Friday of January, January the 4th, and we close at £2.38. On Monday the 7th of January, we dip to £2.35, and literally within 2 weeks later, we are £2.75. So there's the buy signal. The market doesn't do anything for a couple of days. So that price holds. So if you buy that price, your stop, your exit order, your emergency exit order is £2.15. So you are risking that much money, assuming you're getting around about this price, you're risking that much money for the potential to go right back to here, to get right back to £2.89. Now it doesn't go there. It doesn't go there. At this price here, you get a sell signal. So that's a sell signal. So you would, if you haven't already closed, taken your profits, then you would certainly want to get your profits out of that market at that stage. Now it drops hard, so that's why you have to be alert to these support and resistance levels. If I take that out, the most recent resistance level was that's quite a key resistance level there at £2.70. Now actually it goes above £2.70, but gets very shaky up there. So you would at least, you could take some of your profits off, or you could take all your profits off. That's up to you. And then back in March 14, it repeats the whole thing. You get a new low in the market, an immediate close higher, and here we are just coming back into another layer of resistance. So that was a key price in 24th of October. There was a key price on the 7th of December, and it was a problem here on the 7th of February. So that's why a lot of people have taken profits from £2.20 to £2.50. Now that's quite, let's look at that in terms of percentage terms. £2.50 over £2.20 is 14% increase. That's a 14% increase. When you've got, if you leave your money in a bank, you're lucky if you get 2% over a year, over 12 months. This has just given you 12 to 15% in 2 to 3 weeks. So that's the sort of returns you can make on your money. Let's look at a different example. Let's have a look at Britvic. Probably a lot of you drink a product of this company, Britvic. They make a lot of nice fizzy drinks. You can see that price there, £7.32, was a good price in October 2018. That was our resistance. So it has a problem with the price up here. It climbs higher and then immediately drops. So if you come into the trade here at £7.31 and take profits at £8.23, that's still a pretty good profit, isn't it? If you happen to come back in the trade here, even today you would still be in there from £8.23 to £9.43. So it's still a very good price. So you can see, you get the idea, hopefully. You get the idea. So just quickly back to the slides. Just got a couple of other slides to show you. So that's the sort of money you can make. Now in an ordinary UK spread betting account, you can trade very, very small risks. You could even trade less than £1 a point. So you could risk 20 or £30, not £150. You just have to be very patient for this sort of trading to sit in it for 1, 2, 3 weeks. So to be a good trader, what do you need to do to be a good trader? You need to understand how to read the charts and understand how market cycles work. For example, the most profitable time to trade is normally about October to about this time of year, April, May. Then markets tend to start to pick up round about early August. We're not, if you think about it, we're halfway through April, so we're coming into a period where there is a lot of profit taking. You can quite often get profits going into May and June, so that's not a given that everyone's going to sell in May. But if you start preparing how to trade now, then you can start to get into the August-September period, ready for this next cycle. So you need to understand how cycles work, because it's not always a good time to buy. There are certain times of the year when it's good times to buy, certain times of the year when it's good to do nothing. You need to know how to find a clean chart and buy stocks. We buy stocks that are in very good sectors. For example, I like the technology stocks. We've seen a lot of action in healthcare stocks because the population of the developed world is getting so old. Birth rates are dropping and the population is aging. Sometimes oil stocks do very well if oil's doing well. Sometimes gold stocks do well. There's all sorts of ways of finding very good stocks. And then you need to understand how to read the charts. So 3 simple steps. Understand when is a good time to buy and when is a good time to stand aside. Understand how to find clean charts and how to read them. And then understand how to get an entry and manage your trade. So, how can you achieve that? How can you get that knowledge? So, you also need, just one more slide. You need to gain the knowledge, have a very specific plan that you stick to. That's really crucial, because that's where a lot of people go wrong. They want quick profits, they want to get rich quick, and they take too many risks and lose money. So you need to understand the risk you're taking in any one trade. And if you do have a loser, how has that happened? Have you made a mistake? Or has the market suddenly changed? If you stuck to your plan, it's the market's telling you something if you've had a losing trade. So I'm not sitting here telling you every single trade you're going to take is going to be a winner, because it's not. But it's a question of how you manage your losing trades that's going to be key to whether you can continue to trade and continue to make money. And then I can help you find the best charts and the best broker in order to carry all this out. All right, so if you want to get into trading, here is an option for you. Now this is our starter system. So to teach you technical trading, to teach you how to read the charts, how to plan to take a trade, and how to manage risk, then how to write a trade plan, we have mentoring sessions, teaching sessions and mentoring sessions. This is all over a 6-week period. and then we'll show you how to find a good broker and a good chart package. If you want to do this, it's £197 for a 6-week program. So throughout that 6 weeks, you'll be involved in a group of like-minded people who are going through the same learning process as you. There'll be lots of opportunities to work out how to trade, how to set up your brokerage and your charts, and how to time the entry and the price that you need for your entry, to trade your stocks. If you want to continue with this, then so it should be 90. That's why I got 96 and £95 a month to take that further. All right, so this is a very good, simple package with a lot of contact from me, a lot of support from me to teach you how to get into trades like that, like the Dow I've just shown you and some of these other stocks. If you're interested, you can email me at mike@tradetheeasyway.com, or you can phone me or contact me on WhatsApp with that mobile number. All right, so it's a modest amount of money for a lot of intensive training and a lot of support to help you start trading. And you can see from, let's have a look at some other markets. Here is EasyJet. Anybody who flies to EasyJet, this is something that it's a chart I'm interested in, not trading at the moment. You can see all the support. I'm waiting for this price to come back to this pink area here, and then if it comes back to that pink area there, I will consider buying to see if EasyJet can start to move up to some of these price levels. So this 1300 is a key price level. I just need to be able to see the market come down to perhaps 12, 20, 10, 25 to buy and potentially move higher. Another stock I'm interested in is, let's have a look at this, this one, CNA. Oops. This one's not working, so I am definitely not in this trade at the moment. That is not working, so I am not trading it. However, if it starts to recover and get back above this price here, I will contemplate buying that stock. But at the moment, that looks as if that price is not supported, and that looks lower. That looks as if that stock will see more selling. This one has been very, very good. You can see the price support. This is Hargreaves Lansdown. Look at what happened here. And look at what happened if I extend that. Look what happened here. Here and here. So in January, end of January, early February, this was 1600, and we are, if you're in that from February, you will still, even now, it's still worth, it's only just weakening at the resistance levels. So that's a good entry. That's a nice, clean, relatively clean stock. Does that all make sense? So, I mean, look at the risk-reward ratio. If you traded this stock down here in February, you were buying at 1612, 1615. You would need an emergency exit order down here at 1565. So you're risking that much cap. Let's say you got up here, you got this price here. You're risking that much capital for that much reward. So that bar there is tiny compared with the full potential. Obviously, we are struggling. Well, we've broken that price, but we are not at the moment. We're looking very fragile now. So that's a significant risk-reward ratio and a good way to trade that stock. Okay, so I've been talking about 40 minutes. Anybody got any questions? Anybody got any questions? So I've been teaching this since 2008. So I have a lot of people in my trading room who are trading this very same system. And there are options to extend to do other modules. Very good question. What are the costs? The chart package you're seeing here is free. So once you open an account, you put whatever amount of money you want to put in the account, whether that's £200-300 or whether that's 2,000-3,000, whatever. There is a cost for taking a trade. The broker takes what we call the spread. So for example, if you go, I was looking at Hargreaves Lansdown. That stock is known as HL. The cost is the spread that you pay, the difference between the buy price and the broker's spread. So for example, if you are trading £1 a point for Hargreaves Lansdown at the lows, I think the spread, it could be about 15 to 20 points. So as soon as you take that trade, the broker would take that 15 to 20 pounds out of your account. And if that trade goes the wrong way, if you buy that stock and it doesn't go the way you want it, it goes this way, you've lost the spread and you've lost whatever money you risked to take the trade. So apart from these costs and the cost of continuing the support, there's just brokerage spreads, and if you are unlucky to have a losing trade, then of course you've got the risk that that will come out of that. Good. Okay. Any other questions? These are good questions. I'll next time I do a presentation, I'll incorporate them. So thank you for asking them. Okay. Good. Well, contact me. There's my email address, and in fact, I'll just type it in the room so you can make sure everyone, right. Yes, I do run the program at different periods. If you didn't, I've just sent that privately. Thought I was sending that to everybody. I know what I've done. I'll just send that again. If you want to do this next month, I run one program a month. So if you want to do this another time, that's fine. It's a good time to start because, whoops, didn't mean to put that next to there. It's a good time to start because By the time we get to the next cycle and the next upswing, if there is one, then you'll have the knowledge ready to participate. Because obviously, within that 6 weeks, you need to get used to your brokerage, your chart package. You need to start to use what you've been taught. You can start trading, almost next week, but it's better if the market won't necessarily give you an opportunity to start next week, but there is always something to trade. For example, something that I've been trading recently is something I've been trading a lot of. I just find it. At times, I've been trading oil quite a lot recently. I think oil this is very, very similar to the way the market behaved, the Dow behaved in the beginning of the year. This has been another good one to trade. Again, it's suffering up here. You can see this is a measurement tool, by the way. You're looking at a measurement tool that I use very, very frequently. And you'll note that the levels that you're seeing on here are key levels that get bought. That was a target level. So you have another target level here, with another target level here. So, but I still think oil could get up to this $70 a barrel up here. And who knows, if it really gets going, it could even go all the way up to that top again. So there's always a market to be had. Something I've been looking at recently is soybeans. I'm not trading at the moment. The other one, natural gas. Surprise, surprise, that had a big push into early winter. So you can see the chart patterns that we got here. This was a good place to buy. Late winter last year and early summer and early autumn, and then it exploded higher, and then we're back down to support again. Okay, no more questions coming in, so please contact me. Ask me any questions another time if you would like to. And let's get you trading. All right, well, I'll finish there. Thank you very much for joining me, and I look forward to hearing from you. There will be other events through this group. I'll be putting on different types of events to give you updates on where we are in the cycle. I'll be putting on events to talk about maybe commodities, not just stocks. I trade a lot of US stocks as well. If you look at something like Facebook, even today, Facebook has had a good day. That's how I was marking up Facebook. There was a lot of bad press about Facebook, which caused it to have all these problems. But it came out of this pattern. Moved aggressively back up to here. Right, thank you very much. I'll leave it there, and I look forward to hearing from you, and watch out for future events. Thanks very much. Goodbye.